He joins us now by phone. Mohamed, market was already a little bit on edge this morning over the Omicron variant, and now Fed Chair Powell himself talks a faster taper. How big of a problem for stocks is that?
You know, it is an issue. I mean, it's about time, Sarah, that he recognized that the transitory word was a awful characterization of inflation, that inflation is not transitory, that it has to be taken more seriously by the Fed, and that has implications for the taper. He should have done that months ago, as I have argued. The fact that he waited to do it at the same time as the market is trying to understand what this new variant means for the economy is rather curious. I would have chosen a better time to do it. I wouldn't have mixed the two. But it is about time that we move on to a more realistic assessment of inflation and a more responsive monetary policy.
So the timing is interesting, Mohamed, because as you say, the market was already roiled and nervous about economic growth as a result of this potentially vaccine-evading new variant, which has, if you look at the impact on the markets, been disinflationary. So the question now is Powell trying to get ahead of inflation too late?
So I'm not sure that Omicron is disinflationary. I worry more that it is stagflationary, that it may impact demand. It may impact demand, but it will also make the supply shortages and even maybe the labor shortages worse. So I think of it more as a stagflationary wind. It's a good thing that the economy is strong enough. But, you know, Powell should have corrected his mischaracterization of inflation months ago. It was clear from everything the companies were telling us that this is a persistent problem.
In his defense, do you think he had to wait until he got reappointed?
You could very well think so. I couldn't possibly comment, as a famous line from a British sitcom would say. It is curious that it is a few days after his renomination when he could have waited for the Fed meeting that's in just over 2 weeks. It is a curious timing, especially given the new variant.
I wanted to ask as well, Mohamed, to what extent you felt like the latest data on inflation out of Europe is a trigger for this selling and another factor that people have to be more aware of.
Yeah, it wasn't that much this morning. You know, rates in Europe were lower, and they didn't take fright at what was yet another inflation reading that was well above consensus expectation. And Germany is already at 6%. So this is a global phenomenon. And it's not, to be clear, it's not that central banks can improve supply chains. It's not that central banks can increase labor participation. What central banks can do is minimize the risk of inflationary expectations being de-anchored. And we have evidence, mounting evidence, that inflationary expectations are getting de-anchored.
Mohamed, I wonder about the market implications of all of this. If Fed Chair Powell now is talking about a faster taper and the market pushes him not to do that, in other words, we have a few more days like this and potentially like Friday on concerns of this variant, if it doesn't matter what he says now, it just won't happen anyway. And yet again, he will be forced by the market to wait when it comes to removing stimulus.
And that exactly is the problem of waiting too long, is you end up in a lose-lose situation. I've been warning against this for months. He had a massive window to do this early in the year. The economy was strong. The markets were at a record level. Things were improving on the health side. And he didn't take advantage of that window. So now that risk is clearly there. But remember, the difference this time around is inflation, Sarah. And that's why I suggested yesterday on CNBC that inflation is the biggest threat to investors because it changes the liquidity paradigm. It is very difficult for the Fed to suddenly increase asset purchases to calm markets when inflation is persistently high. So the inflation reading is a major, major issue for markets, and it's a major risk for markets because it can change the liquidity paradigm.